Good morning. This is Larry McMillan with the stock market update on Monday, May 23rd, before the market opens. So last week we saw S&P make another two intraday lows, including one on Friday, from which it reversed back upwards quite sharply. But we're still in a pattern of lower highs and lower lows, and that's a negative trend of VIX. Of SPX, and that keeps us with a core bearish position. However, we are starting to see some extreme oversold conditions nearing buy signals in some of the other indicators. For example, in the equity-only put-call ratio, right now the computer analysis is saying that both ratios are now on buy signals, and part of that is due to the reason that they're so high, so oversold on their charts, that it's doing a sort of return to the mean, reversion to the mean sort of analysis. But in reality, we'd like to see them roll over visibly before we actually call the buy signal. Now, the weighted ratio did have a slight decline on Friday, so that could be the beginning of a true buy signal here. That would, of course, be a pretty powerful buy signal from the place where these ratios are already sitting. Breadth has been a little better, but the breadth oscillators are still on sell signals and still in oversold territory. It's still going to take another day, at least one day of strong advances over declines before we get a buy signal there. That could happen quickly, perhaps as early even as today. New highs versus new lows, though. While the number of new lows has declined, the number of new highs is still languishing at an extremely low level. And so we won't get a buy signal from this indicator until the number of new highs starts to increase. So right now, it's still bearish, and we're not really looking for this to roll over anytime soon. Which brings us to VIX. We still have a VIX spike peak buy signal in place. There's been a series of these. Most of them have not worked out too well, but they've been stopped out pretty quickly, so there hasn't been any major damage to one's bank account. On the other hand, when the market does turn, of course, this indicator will be bullish, and as it is right now. The trend of VIX, however, is still negative. That is, VIX is trading above its 200-day moving average, and the 20-day moving average of VIX is also above the 200-day. So until that reverses, at least until VIX falls below the 200-day, which is currently around 22, this will remain an intermediate-term negative indicator. The construct of volatility derivatives, which measures the term structure of the futures mostly, is rather neutral. The term structure is flat from July on out through October. In the very front end, July is trading above June, so that's a positive for stocks. But overall, this indicator really isn't giving us a directional signal at all right now. So returning to the SPX chart, if we do get an oversold rally here, we'll probably reach the 20-day moving average and maybe exceed that by a small distance. So the 20-day moving average right now is at 40.70 and declining. Above there, there's some resistance around 41.50, so that might be an area where the next rally oversold rally could carry to. And then above that is 4,300. A move above 4,300 would be a more significant bullish development. So right now, I invite you to check out our newsletters, visit our website, and you'll see that we cover these items, these indicators, these trading systems daily in our newsletters. Meanwhile, have a great week trading leading up to the 3-day weekend coming up.